Hi everyone, welcome to the online class Kilora. I'm Lavanya. Today we are going to learn one of the important topic in accountancy, that is financial statement. Let's start with the meaning of financial statement. Financial statement are formal records of financial activities and the position of a business or a company or a person that provides a summary of an organization financial performance and financial position over a specific period of time. Here, it is nothing but a document that shows the financial health of the company. It includes income, expenses, assets, and liability. It is prepared for quarterly or yearly, and this is very important tool for a stakeholder, including investors and creditors also, so they can offer insight into the company performance and the financial health of the company. And it has three main types of financial statement, that is income statement, balance sheet, and cash flow statement. Each provides different insight into a company financial performance. Let's go with the meaning of it. First one is income statement. Here it is also called as profit and loss statement. Here it shows the company revenue, expenses, and net income or loss over a specific period of time. It mainly helps us in assessing the profitability and the performance of the business. It is usually highlights the profitability of the business by showing how much money was earned, that is revenue, and the a cost incurred to generate the revenue is expenses. And it is used, it can be calculated with this revenue and expenses. We can calculate the net income, that is revenue minus expenses. Let's know the meaning of balance sheet. Here, it is also called a statement of financial position, and it provides a snapshot of the company financial position at a specific point in time. Here, it shows the company assets, liabilities, and shareholder equity. And also, this balance sheet uses the accounting equation, that is asset is equals to liability plus equity. It is the foundation for the balance sheet, and also here it balances the resources owned by the entity and claimed against those resources. And it is divided into two main sections, that is assets and liability, and equity are up one side and asset one side. Here the asset is nothing but what the company owns, and this liability is the company debts obligations, and here the equity is how much stake is there for a person in a company. Next one is cash flow statement. Here it is a statement that tracks the flow of a cash in and out of the company over a specific period of time. And also it is divided into three main sections, that is operating activity, investing activity, and financial activity. And also it helps us to assess the liquidity and the cash management of the business. And this resources uses of cash includes these three main sections. Later we will go deep into it. And all, now let's know the financial statements. The three important statements are there. No, we have to understand the purpose. What are the purpose of it? First one is income statement. It assesses the profitability of the company. And the balance sheet is, it provides a snapshot of a company financial position at a specific point. When it comes to the cash flow statement, it reveals the cash generated and used by the company and helps in evaluating its ability to meet the short term obligations and invest for a future growth. What are the advantage of financial statement? The first one is performance evaluation. Financial statement helps assess the company profitability over a specific period, and also it uses the key metrics like net income, gross profit, and operating income provides insight into the company's performance with the help of these three financial statements. So it is one of the advantage for the financial statement. The next one is investment decision. Here, by analyzing few factors like earning per share EPS, that is return on equity, and other financial ratios to calculate the financial position of the company and also the overall potential and health of the company to understand, so that it can be easily understood by the investors, creditors, etc. And next is creditworthiness assessment. Here, creditors such as bank and suppliers uses a financial statement to assess the credit worth of the business. They'll understand whether the business is capable or not. They analyze the company ability also by meeting its debt obligations, and their with the help of examining factors like liquidity, solvency, debt to equity ratio. The next one is planning and budgeting. Here, with the help of this planning and with the help of this financial statement, we can also plan for the future and also budget the companies. These companies can identify the trends, project future revenues and expenses, and also realistic financial goal based on the past exam performance. The next one is strategy decision making. Here, the management uses financial statement for strategy decision making, and also it analyzes through the cost, revenue, and the profit. And it also makes informed choice by pricing the product and product lines, investment, and other resources allocation. And for this, financial statement is very important to make a strategy decision. The next one is performance benchmarking. Here, by preparing the financial statement or comparing the financial statement with the competitors, we can analyze our benchmark of the company. So it helps us in identifying the area where the company is lagging, and where we can find where we need to improve, and which area is need to be improved, and will provide an opportunity for improvement also. The next one is income statement. We have understood the meaning of income statement. Let's understand deep into it. Once again, let's understand an income statement, also known as profit and loss statement. It is one of the three main primary financial statement used by the business to report the financial performance over a specific period. Here, in this income statement, it provides a summary of the company revenue, expenses, profit or loss, allowing stakeholders to assess the profitability of the business. Here is a small example for the income statement. Here in this table, we can analyze the format of income statement, and also it is divided into three different sections. Like first one is operating section, in non-operating section, and income tax. Here, the operating expenses are like they depend on the nature of the business. For example, salary, wages, rent and utilities, marketing and advertising, office suppliers, and depreciation, repairs and maintenance, like this. These are the examples for the operating expenses. When it comes to the non-operating expenses, they are not the expenses that are not directly related to the company business core. So it's like interest expenses, loss on investment, interest revenue, legal settlement, reconstruction cost, and legal settlements, etc. Like this. Now we start with the revenue, which subtracts the expenses to see if it makes a profit or loss. For this reason, it is also called as statement of profit and loss account or profit and loss account. And also here we can expand this income statement to get more detail of the topic. So at the top we have the revenue, that the income earned from selling products or services. Then we take away the direct cost of sales, and to find the gross profit. This is the first step you're gonna do. Then after that, we subtract all the indirect expenses to reach operating profit. And finally, we take away the non operating costs like interest and tax, and we leave with the net income or profit. This is how the income statement works. Let's know the advantage of income statement. There are five important advantages. One is profitability assessment, performance monitoring, decision making support, investor and credit analysis, budgeting and forecasting. I think no need to explain this and you'll understand. Let's go to the next topic. No, we'll understand the problem of income statement. Here, the question is like this. From the following trial balance of Ganesh Trading Company Limited as at 31st March 2024 prepares income statement. Here in a particular, cash 17,000, account receivable 12,500, prepaid expenses 1,000, account payable 8,125, tax payable 3,200, long-term loans 1,200, deferred revenue 8,000, accrued expenses 275, stock 1,050, dividend 1,000, revenue 60,000, cost of sale 17,500, general and administration expenses 13,200, depreciation and amortization 850, selling and marketing expenses that is 18,000, and interest expenses is 50, and tax expenses is 750. Overall the debit column is 81,850 and the credit will be 81,850. Let's know how to analyze this table and how to get a solution for it. We should analyze first what are the assets here, what are the liabilities, equities, and also we have to analyze what are the topics comes under the income statement. We have for that we have to analyze the format. So here the assets, liabilities, equities also are given. Like asset are cash, account receivable, prepaid expenses are assets. When it comes to the liability, account payable, tax payable, long-term loans are liabilities. Deferred revenue is also a liability. Your equity is stock, dividend. These two are equity. After that, everything from revenue to total expenses all will come under income statement. That is like when you learn the format, you will understand what are the topics which comes under the income statement. For that, the format is very important. So your revenue which comes for the operating expenses, and this general and administrative expenses, selling and marketing expenses will come under indirect operating cost, and depreciation and amortization comes under indirect that also comes under indirect operating cost, and interest and tax comes under indirect non-operating cost. So with the help, we have to first analyze what the topics comes under income statement. After that we have to prepare it. That is, first one is we have to create a format like this by writing a heading like um, Ganesh Trading Company Limited income statement for the year ending 31st March 2024. Particular, it will have two columns, that is one is particular and amount. The first one is revenue. We have to see what is the revenue amount, that is 60,000. We have to put it there. Then the cost of sale, that is 17,500, and will when subtracted we'll get 42,500. And then we have to add all the expenses, operating expenses, that is general, administrative, selling and marketing, and depreciation, amortization. And when we add all this, we'll get amount and will be subtracted from the gross profit. When that time we'll get operating profit, that is 10,450, and we have to minus this with indirect non-operating costs, that is interest and tax expenses, and we'll get 9,650 as a net profit. This is how you prepare an income statement. Let's go to the next topic, balance sheet. We know the meaning of balance sheet. and it's nothing but a snapshot of a company financial position at a specific point in time, and also it includes assets, liabilities, equities, offering insight in the financial health and indicates the overall balance between resources owned by the company and claims against those resources. And this balance sheet has several important insights that are these, and first one is financial position, liquidity, solvency, and shareholder equity and financial health. Here, yeah, as you know that this balance sheet also follows an equation that is asset is equals to liability plus shareholder equity. And let's start with the first one, that is financial position. And it shows here, by preparing this balance sheet, one side which shows the asset and other side is liability. By balancing this both sheet will analyze the financial position of the company. The next one is liquidity. Here it's nothing but ability of an individual or a company to convert the asset into a cash quickly. So here, cash as a current asset and liability provides information about the company's short-term liquidity and its ability to meet the short-term obligations. When it comes to the solvency, it's like opposite to the liquidity, that it meets the ability of an individual or a company to meet its long-term obligations. So it indicates whether a person or a company has enough asset to cover its debt or liabilities. When it comes to the shareholder equity, is nothing but how much stake is a person owner holds in a company. The next one is financial health. Here it analyzes the financial balance sheet, helps assess the financial health, leverage, overall stability of the company. The next one is key component typically found on balance sheet. In balance sheet, we found these kind of topics, that it assets. In the asset, there are two types, and the liabilities, and it also has subsections and equity. So let's start with the asset. Here, asset is nothing but what the company owns. Like assets are the resources owned or controlled by the company that has economical value and can be used to generate future benefits. And also it has two types and it is categorized into two, that is current asset and non-current asset. Current asset means it's a short term and the non-current is long term. Here in the current assets, it you can have assets, account receivable, inventory, prepaid expenses, and other asset expected to be converted to cash or are used up within 1 year. When it comes to the non-current asset, it includes property, plant, equipments, intangible assets, and long-term investments. This is what asset is. When it comes to the liability, it is nothing but the company's obligations and the debt to an external party. It includes assets liability as classified as current liability, that is short term, and the non-current liability, which is long term. Here in current liability, you will have it will include account payable, short term debts, accrued liability, and other obligation due within 1 year. Long term liability, a long term debt, deferred tax liability, and other obligations within maturity longer than one, that is non current liability. When it comes to the income statement, it is also known as shareholder equity or a net asset also. Here it is nothing but a company owner stake in a company. Represents the individual interest in the company asset for reduction liability, and its ownership interest of the stakeholder in the company, and it includes common stock, retained earnings, and other paid in capital. And also a basic accounting equation which forms the foundation of the balance sheet is asset is equals to liability plus equity. And the format for the balance sheet is this is the format of balance sheet. Here it has three sections, three columns, that is particular, schedules, and amount. Your schedules I'll teach in next class. And in particular it comes with in a first heading equity and liability. It is divided, as I told, the balance sheet is divided into two sections, that is one is asset and one more is liability and equity. Here in equity and liability there are three subsections, that are shareholder fund, non-current liability, and current liability. It is divided into subsections, that is in shareholder fund it includes share capital, reserves, and surplus. And non-current liability, it includes long-term borrowings, deferred tax liability, long-term provision. And in current liability, it includes short-term borrowings, trade payable, other current liabilities, and short-term provisions. And the next part is asset. When we total is all these three subsections, that is shareholder fund, non-current liability, and current liability, it gives the total of total equity and liability. And the next one is asset. Asset is divided into two types, that is non-current asset and current asset. In current asset, it includes fixed asset. In that, it is divided into two categories, that is tangible and intangible. Tangible, as you know, that which we can touch and feel, and intangible, it is not. And the non-current investment, long-term loans and advance comes under non-current asset. In current asset, current investment, inventories, trade receivable, cash and cash equivalent, short-term loans, and advantage comes under asset. When we total these two things, we'll get a total of total asset. And when this is known as balance sheet. This is the format of balance sheet. Let's have an example for this with a problem. Here, the question is, prepare a balance sheet of Krishna for the year ending 31st March 2024. That it has a two column, that is particular and amount. This is the question. The question be like this. And in particular, the machinery, that is 20,000, depreciation 2,000, capital 35,000, net profit is 13,428, and furniture is 1,600, and closing stock is 16,800. Interest on capital is 1,750, and debt is 9,880. Creditor is 3,903, and outstanding salary is 4,000. Prepaid rent is 201, and cash at bank is 8,000. This is the question. And when it comes to solution, we have to first analyze what are the assets, what are the liabilities, and then we have to give a heading, balance sheet at Krishna as at 31st March 2024. And we have to have two columns, that is liability, and it should has amount column, and the asset is one column, and it also should have a amount column. And if you want, you can add one more additional column for the amount, so it will be easy to calculate. Let's know what are the assets and liabilities. First, we have to analyze this question format. First one is machinery, which comes under asset, as you know, and the depreciation, it also comes under asset, and this capital is a liability, and the net profit is also comes under the capital, so it is also a liability. And the furniture is an asset; it goes to the asset column, and closing stock will come it is just left like that. They'll no, it'll come under closing stock. Okay, it comes under the asset, and then interest on capital is liability, and the debt will come under asset, and the credit will come under the liability, and the outstanding salary is also a liability, and the prepaid expenses and the cash at bank is asset. So we have to analyze this, which are the what are the assets and what are the liabilities, and then we have to um, apply in the table format, and we have to add all this. You have a doubt that about related to the machinery and the capital here. When it comes to the asset, here machinery will be depreciated. Here when it there will be two types of appreciation and depreciation, amortization and depreciation. When on asset, what any kind of asset which is given a depreciation, we have to minus it. When it comes to the amortization, we have to add it. So here the depreciation is given, so you have to minus it. So you'll from machinery 20,000 and you'll minus 2,000, so you'll get 18,000. When it comes to the capital, it's a net profit, so you'll add it. Interest on capital is also related to the capital, so we'll add all three together and ha- give a total amount 50,178. So you'll add all this. When both asset and liability is amount is equal, then it is then the problem is then the solution is correct. When it is not tallying, it will be somewhere you'll be done a mistake, so you have to analyze it. Okay, you'll verify this solution like this. By verifying both the and amount will be equal, then you will consider it as a correct one. When if it is not tallying, then it will be a wrong one. So you have to balance it. Okay, the next one is cash flow statement. Here, a financial statement that provides a summary of the cash inflow and outflow of the business over a specific period of time. And it also includes three main financial statement, that is operating activity, investment activity, and financial activity. Here, when it comes to the operating activity, it is nothing but this section shows the cash flow of a company day to day operation. It includes cash receipts from customers, cash payments to suppliers, and the cash payment from operating expenses like salary, rent, and utility. Basically, it focuses on the cash generated or used in the company core business operations. And the next one is investment activity. Here in this section, it focuses on cash flow related to investment in long-term assets. It includes cash inflow from the asset of sale of asset like property or equity, as well as a cash outflow from the purchase of asset or investment. It also helps us in understanding how the company is investing its money in things like new equipments or acquisitions. And the next section is financial activity. Here in this section, the cash flow related to the company financial sources. It shows the cash flow related to company financial sources. It includes cash inflow from issuing stock or bonds, as well as cash outflow from repaying loans or paying dividend to shareholders. And also it helps us to see how the company is raising capital and managing its financial structure. Here, by looking into these three sections, we can clearly analyze a picture how a cash is flowing in and out of the company. So this is very important for the for understanding the financial health and the stability of a company. So here is a problem. Here is a problem for cash flow statement. For we have to if we need to prepare a cash flow statement, we need these two tables. That is, one is um, the net profit, which is cost of goods sold, that income statement, and a balance sheet. With these two statements only we can prepare a cash flow statement. We have to know what is the net profit, gross profit, and also the total asset and liability and the total equity also. So by knowing this cash flow statement format, we have to analyze what are the things which comes under cash flow from operation, cash flow from investment, and cash flow from financing. Here, let's see what are the things which comes under cash flow from operation. Here, the things which comes under important thing is net income. You have to know the net income. So here the net income is given 60,000, and then addition to cash we have to add related to this. In the question they'll give us the net income, and we have to know what we need to add to the cash. That is depreciation. One is depreciation, and one more depreciation and one more is increase in account payable, that is 10,000, and next account receivable, that is 20,000, and then increase in inventory 30,000. We have to add all this and minus that in a minor we have to minus from the things we had to the cash, and then we'll get a total net cash from operation, that is 40,000. And then cash flow from investing is purchase of inventory equipments. Here we have purchased the equipments in balance sheet, so we have to minus it there. When it comes to the cash flow from financing, that is note payable, that is 7,500. We have to add that one. So when we had when he get the total net cash from operation, that is 40,000, we have to minus it, that then you will get 35,000. After that, when you had the cash flow from financing, that is 7,500, you'll add it, then you'll get 42,500. That is the cash flow from for this month. This is how you analyze and prepare a cash flow statement. Let's get into a new topic, that is meaning of statement of retained earnings. This is one of the topic which is related to the financial statement. At last, it is very important. It is a financial statement that outlines the change in the company retaining earnings over a specific period of time, and it is linked to the income statement and balance sheet also. With the help of this income statement and balance sheet, you can prepare this retained earning. We have to prepare this retained earning just to represent the accumulated net earning or a profit retained by the company after distributing to the dividends to its shareholder. It includes three things, that is beginning retained earnings, net income or a net loss, and a dividend, and the last one is ending retained earnings. Here, beginning retained earnings is nothing but at the starting of the period or carried over a previous accounting period balance sheet. That is beginning retained earnings. When it comes to the net income, it is nothing but, as you know, that obtain the income statement. The net income increases retained earning while a net loss decreases in it. And when it comes to the dividend, as you know that, which represent the portion of the profit distributed to its shareholders and subtract from the retained earnings. And next one is ending retained earnings, the final balance of the retained earnings at the end of the period, calculated by adding the beginning retained earnings, net income, and subtract all the dividend. Okay. The formula is ending retained earnings is equals to beginning retained earnings plus net income minus dividend. Okay, let's have an example. The question is, B Logistic begins a new accounting period with 1 lakh in retained earnings. Here, the accounting period which B Logistic begins with the retained earnings is 1 lakh. And over a accounting period, the company posts the net loss. Here, the net loss is 25,000. At the end of the accounting period, the company board decides to pay out 5,000 in dividend to each shareholder. Here, as you know that when the net loss is given in accounting period, here in this statement, in the net loss, last you can see that the net income increases retained earnings while a net loss decreases in it. Here, when it comes a net loss, we have to decrease it. So the solution is retained as a formula is beginning retained earnings. Here, the beginning retained earnings is 1 lakh rupees, and net income is net income, where you have got a profit. You have to add it. When it is loss, you have to minus it. So 25,000 will be deducted from 1 lakh rupees, that is retained earnings, and this 5,000 which is a dividend given to a dividend, so we have to subtract it. So when you subtract it from 1 lakh, you will get the total answer is 70,000. The amount will be carried over the next accounting period and can be used in reinvesting to the company, or you can pay in the future dividends also. This is the example for the statement of retained earning, and this is how you calculate the statement of retained earnings with this formula.